Tuesday, the 4th of August. Welcome to Frontier Opening Bell. Thank you, my panelists, Ayode Jebo, the CEO at Afrinvest Securities Limited. Good morning. And Joshua Odebisi, who is the banking analyst at Betiva Capital Management. Thank you, both of you, for coming on the show this morning.
Thank you.
Thank you.
Thank you, Joshua. We appreciate your coming through as well. Not a very particularly negative day for African equities, but again, it's a bit of a mix as we start the month of August. So, quick review of Monday: Nigeria market about 0.3% in the positive territory. The Ivorian market, which is the second largest market within the West Coast, was down a whopping 1.33%. The Egyptians will be back today after a long Salah holiday. So the figure you see there was 0.29% for the last trading day in the Egyptian market on Wednesday last week. The Kenyan market was sharply lower, 2.72%. The shilling was also down a little bit against the US dollar. The South African GSE, 0.2% positive reading, a little bit much stronger this morning. Rand is making a comeback. The dollar is soft a little bit this Tuesday morning. Let's look at the East African space, where the shilling, the Kenyan shilling was down on the dollar again because of reporters are demanding. Year to date, the currency is lower, 6.3% on the greenback. Meantime, the Bank of Uganda is accusing some of people of accused of frustrating Islamic financial services within the country. The authorities are yet to fully agree to Islamic financial services within the East African country, that's Uganda. Big news yesterday for the Rwanda Stock Exchange. They got the cement maker Semawa, which is their largest cement producer, listing by introduction 703.2 million ordinary shares. About 450,000 units of that was available for trading at the markets on Monday. A very big jump there. A major listing so far this year for the small company. So that brings the total issuers listed on the Rwanda Stock Exchange to 10, with Semawa becoming one of the bellwethers within that very small market. In Nigeria, the story came in late yesterday that the World Bank will be holding board of directors, executive board will be holding the meeting this week to consider Nigeria 1.5 billion US dollars loan, which has been pending. That is one big story that came into yesterday. But the earnings is the big story, which has to do with the Boa Cement half-year revenue, earnings per share, better than expected numbers, one-off impairment right back 1.2 billion naira. USCN is selling 51% of the majority of UPDC to custodian investment. The share price of USCN reacting to its earnings, which came in recently and not too good. Shoprite is not leaving Nigeria. The jury is still out there as to what this company will disclose when it releases full earnings in South Africa and make final decision for Nigerian authorities. Ikeja Hotels is a very small cap company reporting 785 million loss after tax for its half year 2020, first half of the year. Where do we start from? We haven't seen the stories from the big banks. Let me start from Joshua. The big banks are yet to report, or we've seen a few, one or two numbers. Yesterday, the banking sector was up 0.70%. What's driving some of these soft sentiments to the north, starting the brand new week?
Well, Boasen, the thing is, the two banks we've seen, the two major releases we've seen so far have been, fairly positive, better than expected, you'd say. More so FCMB than FBNH for a variety of reasons. But obviously, FBN Holdings reported a significant increase in gross earnings year on year, about 6%. Non-interest income was up about 40%. But I have to, appendix that with the fact that this is based on a revision of their half-year 19 results. But overall, I think the main story is the fact that they gained about 13.6 billion from the sale of their insurance business. So, they had a call yesterday where they reiterated that their plan is to, going forward, focus more on their core banking business and to, become, they say, the number one bank in Nigeria once again. So obviously this was very encouraging for investors because, PAT at the end of the year was up about 56% year on year. So investors were very, very encouraged by this. But if you drill down into the numbers, you will realize that net interest income was down by about 7%. Non-interest income was also down, but because of the sale of their business, it really helped to prop up their figures. They also saw a little bit of a decline quarter on quarter in loans and advances, which is to be expected, and they made a pretty significant loss on FX in Q2, which they claim is from a specific transaction that they did, which translated to gains in interest income, but which required them to take a loss on foreign exchange trading income. But for FCMB, it's a bit more straightforward. They did well almost universally across the board. They reported a pretty strong increase in profit after tax, gross earnings, interest income, non-interest income. So they were also pretty solid, and Q2 was actually a good quarter for them, contrary to what we were expecting. But like I had already addressed on this program, that FCMB and other banks were going to attempt to fix their interest income, or rather fix their non-performing loans by giving by essentially giving moratoriums and restructuring a good number of those loans to maintain a low NPL, and that is what they did. So the NPLs remained pretty much in line with our expectations, and basically they were able to have a very strong performance overall. And I think that's basically what investors were reacting to, and that's what we've seen.
Joshua, I have a quick question to you. Do you think the banks are taking very quick action to respond to the COVID-19 pandemic? Are you seeing a sign of that within the numbers in terms of how quickly they are reacting and trying to reposition so that they don't take a very major hit in the year?
Yes, I would say so, because we've been hearing from very early on that the banks had approached the CBN with the view of restructuring a large part, I think about 41% of industry loans. And I think obviously this was with a view towards pushing the repayment periods a bit further out, and essentially creating a buffer so that these banks would not have to report such heavy provisions and heavy loan losses in the coming quarters. And I think that's definitely been a positive for them. A lot of other banks have also taken on other strategies outside of just addressing their interest income. Obviously, there's been a lot of treasury activity. That we've seen from the two banks. We saw some significant increases in the gains on sales of investment securities. So we see that they've been doing a lot in the treasury department, even though the CBN hasn't made it easy for them, but they've still been, doing basically everything they can to extract as much value as possible from those avenues. So I think that definitely they are not, sitting on their haunches, and they're being very proactive. And I think it's shown in their numbers for Q2.
I love that, and I think I just love this very proactive manner in which Nigerians react very quickly to this. Talking about the banking sector, I need to speak to us on the brick and mortar side. This is Boa Cement, the third in the big names we have on the Nigerian cement space. We saw Dangote, we saw Lafarge positive, and here is Boa Cement also topping the story. A triple-digit revenue, 101 billion naira, and earnings per share, a big jump when the numbers came in yesterday evening after trading hours. What's your take on this cement industry and industrial goods in general?
Okay, thanks, Wasim. And this is also in line with what we've seen from the other competitors. We saw Dangote Cement improve their top line by 2% year on year. WAPCO also improved their top line by 2% year on year. So it's been a surprise, but we can see it across the industry, the cement industry, that they've been able to sustain their sales. The major why I call this a surprise is because we know a lot of construction companies or construction works stopped within the full lockdown for about 5 weeks. And before, let's say maybe stop for almost 8 weeks before we saw most of them reopening and restarting their work. But this did not impact much on their earnings. And if you look at for BUA, for instance, their top line grew by about roughly also about by 2-3%. But what weighed down on their PAT is um, their distribution costs. So their marketing expenses and overhead, which maybe we may attribute to maybe some of the bottlenecks within distribution within the period of the lockdown. That one surged by over 100%. And also their distribution cost was also up, which is understandable within this period. But if you, we believe that this, based on some of the strategies they are putting in place regarding the cost of energy, trying to be more efficient within that space, it will really impact on the overall cost of sales, which will make it more profitable also going forward for BUA. Then touching on the divestment of UACN, trying to sell about 51% of its holdings in UPDC, and this would be bought over by Custodian Investment PLC. We know Custodian have tried to diversify away from just insurance. They are more now as like a financial company. They have their PFAs, they have a trustee, and for them, they feel that we feel there's also a major opportunity within the real estate sector. Though the sector has not, when you look at it as an economy, has not been growing. They've been in recession. Their growth has been negative in the past few quarters. But we feel that there's an opportunity within this space, and with the concluded rights issue for UPDC, that is also very positive for them. So they've been able to reduce the costs, able to reduce the finance costs of UPDC. So merging that together, the rights issue was about 16 billion. So merging that together with Custodian Investments will not weigh significantly on the company. Now we believe with the strength of Custodian Investment, a strong PFA, strong insurance company, it would also be able to leverage on that and create like a REIT, and that would also help a lot of the return on that investment, and they were able to restructure things based on their experience.
Interesting. Let's touch on South Africa, and I have one key question about divestment and how it really works with Joshua when ShopRite says they're not leaving Nigeria, although this is not a listed company, but this is a company listed within the South African space. The first is 6.4%. Any headline earnings per share, it says it's going to be between 1.6% south to 6.4% to the north. Yesterday, we saw the South Africa PMI at 51.2 for July. That's lower, but still positive, not yet below 50. Telecom South Africa says it's starting insurance business, but it's going to start by selling funeral insurance as it diversifies away also into beyond telecom into financial services. South Africa, the Zimbabwe Stock Exchange, I beg your pardon, reopened lower yesterday, 4.45% negative. Financial index was up after a shutdown of the stock exchange for about a month. And of course, the Bushveld Minerals deal, 1.5%, is still on the table. Joshua, a quick one here. When you look at divestment, we'll talk about UPDC now and UACN. Divestment, what does it really mean when the companies divesting, whether local or foreign? How does it really work? I'm sure Vertebra Capital has engaged as an investment bank in some of these transactions over the years.
Well, okay, so when it comes to these kinds of divestments, basically what it means is a company, either a holding company or a group company, is selling off one of its business units, either to derive profit or just to refocus the business on maybe its core business, or rather just to move away from an industry where it feels like it doesn't have a competitive advantage, or rather the strength or the strategy to really maximize value from that business. And I think obviously we've seen that with UACN and UPDC in recent times. The UPDC arm has really, I think, been a bit of a distraction to the core business of UACN, because UACN and UPDC, they don't lie even close to the same business operations. So I think there's no real overlap, and it has been a real drag on their operations. And obviously on their profits as well. So I
You're
think
very
this
correct.
is, yeah. So I think this is a very a positive strategy, and I think the reason why we're seeing more of them is that companies are starting to realize that there's a need for core focus in order to derive maximum value from the core focus of your business. First Bank obviously has seen that there's very little potential for them to really maximize any value from the insurance business, and USAN are seeing the same thing. And I think obviously we'll continue to see more of that, especially in this kind of environment where the economy is not really favorable to big sprawling businesses with no real cohesive strategy.
I love that. But when it comes to divestments such as what ShopRite South Africa, which is listed over there, is saying about Nigeria, what's your take on this? What this divestment will likely look like in terms of what we already know? That they said there are local investors who want to buy into it. It's a little bit different from the USC type because it's not a subsidiary. This is a core investment in the Nigerian space. What does it
Yeah.
bring to the fore?
Okay. If you look at that's the burning news and if you look at it, you would, if you check their financials, Nigeria has continued to be a major drag. South Africa has been contributing over 75% to the group revenue, and with the even with about 20% contribution from Nigeria, it's also been a major drag. So I would just attribute this to the cost of doing business in Nigeria. Even also for them, if they are looking at their investment in dollar terms, will continue to have been eroded based on the evaluation and depreciation of the naira that we've been seeing over time. And for them, they import a lot for and to sell. But you can see the bottleneck in 2016. Would see if their stores were almost empty because they couldn't import then, which is also almost happening now. So all those FX challenges is also a major concern to them. So I feel that for most of the investors, they would have looked at it strategically. Why continue to carry this liability? Yes, it looks like Nigeria, there's the market, but when you look at doing business in Nigeria, the cost is significantly very high. And with the devaluation, even if you have invested $1 million in the last 5 years, your $1 million now in real terms would have reduced significantly if you are going to repatriate your profit. So I feel it's just shedding heavy weight, like we saw Lafarge Wapco, the South African business was dragging the company behind for almost 2-3 years before they had to also divest that. So, but the only next signal that foreign investors, there's been a lot of foreign companies that have been exiting Nigeria, and it's really going to be a major concern for potential ones. So they will want to know the reason why is ShopRite not profitable. We have the numbers, the youthful and active age about 65% of our population of 200. So why is it not profitable? That Tiger brand had to exit Nigeria. Mr. Price had to exit Nigeria. OPay. So when you look at a lot of these companies, why are they leaving Nigeria? Where it seems that when you check the numbers, you check the figures, there should be that demand there. So there's really a problem which government needs to sit down to look at it if we want to attract new foreign investors in Nigeria.
Joshua, what's your take on this?
Well, okay, so like you said, I think it's important to look at their core ideology and what their plan was when they came to Nigeria. Now they claim that they're not, exiting a they call it a $30 billion investment. I mean, the thing is, they already have a very large network of stores, and from the little I know about their developments, they were, planning on still opening a few more across the country. Now, the main issue has always been a case of, importing, selling, and then converting to dollar and exiting. And we all know right now that the exits is the main issue. There is very little, there's heavy demand on the CBN for FX liquidity at the moment. That there's a huge backlog for, I think, a few months at least. So that is obviously going to have a huge impact on their business, because not only are they not able to, take out profits, they might not even be able to pay foreign suppliers. So all these would drag any business that operates that kind of model. But I feel as if, exiting the country completely would not be, the best strategy. And they claim that, they just want to open up to investors, to which I would say they should come and list on the Nigerian Stock Exchange. But ultimately, I think there's still potential. This is a very heavy situation for the whole country, but I do believe that as time goes by, things will normalize, because the pandemic will not last forever, and the global economy will shift and move. And I think that this would be if they were to completely divest from the local business and leave, it would be a very short-term solution to a long-term problem. So I don't think that would be the best strategy. But again, I don't know what their their values are, or what their objectives are for their business. So I can't really speak to that completely. But I think that overall there's still a lot of potential, and we've seen a bit of a shift. Obviously, after the first devaluation, we started to see a change in the kind of products we saw in ShopRite, and obviously there had to be a bit of an increase in local supply. And we've seen a lot of that. So I think obviously what would now have to happen is that they would have to find local solutions in order to, limit their FX losses, or to limit their importation. That's really the only thing that they can do to stay profitable.
With both of you, we have quite a lot of business challenges to fix. Our ports are not efficiently run for exporters and for importers. That's a major drag for anyone, even if we have the demographic here and those who have the pockets to share. If it takes hours or days and weeks on bad roads or whatever to get out of the ports and get to location, that's not good news for anyone doing businesses. Even within the Nigeria itself, the logistics problem remains there. We don't have the rails fully yet for commercial or for cargo and all of that. So it's a big problem. Then, but you look at the positive side, which also I agree with Joshua and Ayodeji here, is that we've seen a number of local retail stores in the neighborhood springing up, which are sporting a lot of local products around the neighborhood. So perhaps things are changing. ShopRite says they will reconsider their business model in Nigeria. We've seen other foreign brands like Spa, for example, increasing the number of stores in Lagos and elsewhere. Mega stores, by the way, they don't have the 10-acre, 20-acre kind of what ShopRite is doing, but they just have a store. They have everything you need in there as well. So I guess perhaps like you rightly said, that Joshua, they will have to rethink their strategy for Nigeria. Maybe the initial strategy of thinking that when they came in 15 years ago, what's the exchange rate, 15 years ago in Nigeria, by the way?
Yeah, it will be around maybe 185 or maybe less than 100. 15 years ago.
15 years ago, yeah, that's less than 100. So Joshua, today you're looking at about 400 or so. So times have changed, relationships, times have changed. Unemployment has also increased in Nigeria. Let's agree with that. So people's pockets are seriously tight. And when that happens, folks will take their eyes away from imported products sometimes and go for local alternatives where they exist. So maybe this will also help local manufacturers to increase the quality, the volume of what they produce, and try to push it more to the market, because it's all going to be Naira staying within the Nigerian environment. And then we can then refocus for export. By the way, because you can't be importing with FX, selling local currency and repatriating with an FX, it's going to be a very tough one for you. For MTN, for example, apart from the equipment and all that, everything else is local here. So the market is here. You can take out your Naira in dollars and you still have some headroom to smile. Cement is also the same thing, like you rightly put it, in terms of Lafarge Africa, consolidating Nigeria, where there's huge infrastructural deficit that needs to be to be fixed, looking at the government focus on infrastructure spending and capex on a year-on-year basis. Very interesting. Thank you, both of you. Let's just give you, everyone, the final notes on North Africa. They'll be back in business today fully, but Morocco says it's pumping $12.8 billion, so about 11% of its GDP, into the economy to mitigate the impact of the coronavirus. That's a major amount. It's a big chunk of its GDP going into that. That's a big fight. Meantime, Algeria is planning, not planning, but they're okay that Islamic financial services should take up. There's a liquidity problem in Algeria, and the government is trying to keep banking liquidity in place and make sure that the economy really works, and try to stave off political unrest that is beginning to increase on a daily basis for the Northern African economy. Thank you, Ayode Jiebo from Afrinvest. We appreciate your time this morning. Joshua Debisi, have a great day as well. Thank you so much, both of you, for coming in today. We appreciate your time on Frontier Opening Bell. See you once again.